When sellers are offer price, buyers then get offer price. So when the market's pushing to the bullish side or even the bearish side, right? And price hits a red wick rejection up to the bullish side, that caused a reaction down to the bearish side. That's going to be take profits, right? So it's going to be people selling, right? So it's offering sellers price, right? Normally that's going to occur within the optimal trading range of a trend, right? Not always, right? Because like breaker structure is always subjective to where the market's pushing, right? So if the market's pushing bullish, right, you then would be like, okay, if it breaks this area, look at right here, this wick rejection to the bull side with a red candle, you then can look for a retracement to offer buyer's price and then a continued push to the bull side, right? Now, if buyers are offer price, then we would only expect that sellers are offer price, right? So if we're pushing down to the bearish side, right, and buyers are offer price, we then would anticipate sellers to be offer price. Now, what is buyers being offer price, right? So what would that be breaking below? What wick rejection would that be breaking below? It would be, I have to look at this, right? Because there's a, 1 minute. Just have to grab a marker. So when we're pushing down to the bearish side, right? So buyers being offer price would be a wick rejection down to the bearish side with a red candle, right? Because what is occurring with a wick rejection down to the bearish side with a red candle? What's occurring? Look at it right there, right? Smart money is taking short take profits, right? So they're taking their profits, right? They're buying to cover, right? So buyers are offer price. Look at it right there. We then would anticipate sellers to then be offer price, right? So if we have a wick rejection down to the bearish side, right, we would anticipate buyers to then be offer price, right? So for example, look at over here. You see this wick rejection down to the bear side. Look at it right there. Price then runs through it, right? And it causes a pretty good reaction to the bull side, right? We can see that cause a higher high, right? So right here would be a strong low. It breaks below that strong low. And then we can see that it starts to consolidate right here, right? Which consolidation after breaking below a low like that would then likely mean that the market's going to push the bull side, right? So we would anticipate the market to push the bull side. Because it offered buyer's price, now it has to offer seller's price, right? So all this area, look at over here, is all balanced, right? All this price action, look at over here, is balanced. There is unbalanced price action, look at it right there, right? Which would be what? Buyers being offered price, look at it right there, right? But other than that, the market's not very, it's all balanced, look at it over here, right? So we can then anticipate price to push up higher where the market was unbalanced. And so if we have so like look at over here, right? This long wick rejection out of the bear side would be short, take profits, right? Now it ran below another wick rejection down to the bear side, right? So likely that was just manipulation to then push to the bull side, right? So this would be a protected low. Now manipulation is the creation of protected lows and protected highs because smart money is entering into the market. We're just gonna simplify. Maybe overcomplication is not where it's at, right? Or I think that complicated movement comes from understanding very simplistic movement, right? So if you understand the inner workings of a simplistic quartz dial watch that you may get from Walmart, or even like a like a low grade watch that maybe only has like 30 pieces, right? Then you can start to understand and work your way up to then understanding more complicated movements of like 100, 200, 300 pieces within a watch, or maybe sometimes even more. And so if we have a long wick direction to the bullish side with the red candle, right, there's going to be difficulty breaking through that, right, because it's going to be as resistance. The same as, right, because sellers are being offered price. Look at it right there, right? So the market's going to want to drop and offer buyer's price. So let's say the same with a wick rejection down to the bear side, right? There's going to be difficulty breaking through that wick rejection down to the bear side, right? Because buyers are going to be offer price. Look at it right there, right? Because shorts are going to be taking their profits, right? And then buyers are going to be buying, right? They're buying to cover. So shit, I'm just trying to figure out this. I might go read another book, right? Because I believe that foundation is everything. Your foundational understanding is everything, right? If you're building a house, right? If you have a shitty foundation, a probability that that's going to result in a shitty house, or even a house that doesn't last as long, right? So, for example, we could say that the relation between the foundation of a house and the foundation of trading would be the correlation of profits within trading. So if we're looking at profits within trading, we're going to say, okay, if you have a shitty foundation, your profits are going to be limited because your understanding is limited, right? The same as if your foundation is limited to a certain budget, high probability that your time is limited to the forestanding of the house and how long that house is going to last. Two books that I think really created a very big foundation is this book right here. Anna Cooling is the author. A Complete Guide to Volume Price Analysis, this book. And then Stock Trading and Investing Using Volume Price Analysis. This is the book that comes after this. This is more of like a foundational book. And then this is a book that has a bunch of examples. But it shows that it shows that volume would then correlate to volume would correlate to the weakness and strength of the market, right? So if you have like high volume on like a candle that doesn't need high volume, then it's probably going to show weakness in a certain direction, right? So it's going to be an anomaly. And I think that this book really, right, because like right after this book, I started then dabbling in this was shit, not last year, 2 years ago. Not last year summer, but 2022 summer. I started dabbling in like understanding the candlesticks and what the candlesticks then would show. And I started using volume, and then after that I found like supply and demand. That really didn't click with me, right? Because supply and demand, it was like too like I was like, man, you have these big ranges where like if you're trading like ES futures, you have like a range of, of 10 points. And like it was like a one kind of like a 1-to-1 RR. So I was like, I was like very analytical and like math. So I was like, I don't really want to. Right? Because like think like you wanna have uh exponential growth. Growth where it can just go up and up and up and up. There's no cap. Right? It goes through the origin and then just keeps going, right? It doesn't start anywhere higher or lower, right? Higher or lower, and not through the origin, right? You always want to start through the origin. If you start through the origin, you can just like be like, okay, it's gonna go here, right? It's much like a linear path. Yeah. Um, but yeah, those books were very good. I recommend them to anybody. I'm gonna read them again or just look through them just to understand pricing, because like I'm kind of conflicted within like the reversal price, right? So what's a signal of a reversal? I think that's what kind of is like conflicting ideas. Because like 2 years ago, a year ago, sorry, my apologies. But a year ago, I was, or a little more than a year ago, like a year and 3 months ago, I was like fucking, I wasn't able to be stopped. It was just like so much fucking confidence created through just like reading these books, having a very good foundation, and then like it was like, okay, we can see reversal, look at over here, and then push up to the low side. And like sometimes it was like, oh, I'm gonna prematurely enter on this candle, look at over here, right? Because we can see these things, and a high probability that we get a green candle next, and then that green candle next would then show me if the market's gonna push up or the market's gonna push down, right? Depending on the candle structure and if it was like a strong candle or a weak candle, right? And I was like, So it was like, and like most of my trades would either be break even or they'd be like fucking 1 to 10s, 1 to 20s, 1 to 30s. It was insane, right? Because I was just like integrating multi time frame analysis, higher time frame and lower time frame, just like understanding. Uh, and that's like one of the big things that I helped me really a lot. I need to kind of like get back into, I guess. Uh, but yeah, these two books really helped me. And I started, I think, like started looking at charts because like I wasn't able to look at charts during the whole summer when I was reading these books. So I was pretty much just going through examples on notebooks, and I was like studying for 6 hours a day, like just like real deal down in the fucking like books. Like I didn't have a laptop. I didn't have, so there was literally no distraction. It was like read these books, no TV. It was like straight up go go go. Like it was crazy, bro. Like dedication. I was like, I'm gonna be rich. I'm gonna be rich. I'm gonna be rich. Like it was like, I got home from. I used to work 7 to 3, right, 8 hour day, and then I would study from 3:30 on till 11:30, 12 o'clock at night, and then wake up at 6 the next morning. And now it's kind of like just like not that, and like I need to get the fuck back to that because like it was like the growth was like boom straight up, like the information, like the mental capacity for diving in information and getting more and more information just was like crazy, bro. Like I'm gonna get back to that. Like, and I think like right now I have like the distraction of like I think everybody does, like just being having that instant dopamine, that instant gratification where I didn't have that when I was just like studying. Like that instant gratification was gonna come, right? But that instant gratification was gonna be in the form of like cars and shit. But like then I wasn't able to, uh, you know, because my parents didn't want to open an account. But I had like premonition shit and sleep that I was gonna have a Lambo before like at like 16, right? Like, and like I wanted to open an account like a couple months before my birthday. I was like, I'm gonna be able to reach 1 million in freaking a month, and then I wasn't able to open an account, so I was like, shit. I don't know. It just became depressing as hell. But yeah, these books are really good, and like I got away from volume price analysis because of the fact that you're not able to predict highs and like tops and like bottoms and lows in the market, right? Because I was like very like, I'm gonna I wanted to like predict like the tops and lows within the market highs, market lows. And like with like volume price analysis, it was very much like kind of like see what the next candle presents itself with, because like okay, volume's dying off here. Book teaches like okay, volume's dying off here, right? Where the candles then showing. Okay, they're pretty much the same. And then like they're not dying off in what's it called, in the like within like candle structure, so like the size of the candles, but volume's dying off, right? So what then would that show, right? Trends then dying off, right? And then you may get a retracement and then push back up to the bull side, right? So it has to push back down to grab more liquidity before then it can run higher. uh right, so it's like running into like whatever, like freaking supply. But like I started to get away from that because I was like, you really can't predict market highs and market lows. And I think where the click came from me within market structure, reading market structure, multi-time frame analysis was like, okay, I see this on the 1 hour, right? Then I'm gonna go down to the 15 minute, wait for it to hit this area, look over here, and then look for the reversal and push higher, right? So it was like I'm not going to enter off of this area, look over here, but I'm going to then scale back down, and I'm going to find a reversal signal that then I should enter. And I think that just like being able to read candles, being able to read what the candles tell us really helped me. Like distribution phases, manipulation phases. But yeah, I promote anybody to read books like this. I wish I could go back, but shit, you can't go back, bro. You can only go forward, and I think that's like something, bro. You can only go forward. Fuck. But that's all I have today. The rant, the second one. But yeah, I'll keep you posted what goes on.